Hi guys, welcome back. So that was a great rebound today. I had never had a single day in which my portfolio could be up 17% in a day. Usually during the good days it would be around 5 to 7%. So it was really a very strong rebound today. I think a lot of people's portfolio had gained back a lot of the losses. So in the morning, Nasdaq opened up high and broke through the resistance of 12,900 with strong momentum and has successfully stayed above the whole day. Now the next resistance would be around 13,300, and don't be surprised if it backtests the support at any time, as it might move up and down between this range. Now we know a lot of people had panic sell last week on Thursday, especially Friday, and after they sold right away it bounced back up quickly, and it might be quite unlikely that they would let you buy back what you have sold at your selling price. So people might regret selling after it bounced back up, and then they are worried to miss out and might end up buying back again. But seeing it coming back down during the day might drive them to be scared and cut loss again. So this is why it's not a good idea to try to time the market, because the moment you start to do so, you might end up losing more and give away your shares at a very bargain price where you should be buying instead of selling. So that's why during the days when everything is going down like a bloodbath, nobody was thinking with rational anymore, and they might end up selling just because they couldn't take it anymore. So it was really emotion to drive the decision, not being calm to make decisions. So when this happened, it would be much better to just do nothing if you have no cash left. Let's look at the S&P 500. Now the S&P 500 looks like it got rejected on the 20-day moving average, which is this line I have drawn around at 3,878. It was trying to break through it but got back down and closed at around this level. So now it would be supported by the 5-day moving average. So it would likely move around this range as long as it doesn't drop below this 5-day moving average, then it should be okay. For Dow Jones, it had reached the all-time high again during the day but got back down, leaving the day not looking quite as good. So it might backtest the support here. So sector rotation really happened faster and faster. So for a lot of people who cut their tech stocks last week and chase the recovery stocks might not have enjoyed the great rebound today for a lot of the growth stocks. So that's why it's important to stay consistent and not chase the stocks that had just gone up high. Now let's look at our stocks. So our baby NEO had gone up 17% today. I know a lot of people in the Discord had bought the dip on last Friday, enjoying the great run up. This is why last Friday I sent a message to tell everyone to evaluate the portfolio and switch the stocks to the leader of the sectors. Because when the market rebound, the leader of the sector would more than likely rebound first. So that's why when we compare to the same sector, which is Li Auto and XPeng, because Li Auto had gained 8% today, while Xiaopeng had gained 11%, and they both have this hammer line. That does not look as healthy. It means there were a lot of selling pressure pushing the price back down. So this is what I would do in the market correction. Even though I have to sell some of the stocks at loss, I would hold on tight to the leader of the sectors. This is what usually the capital would do, unless there are special news for the companies. But other than that, it's always safer to hold on to the leader of the sector. And after the leader has gone back up, then the capital can spread it to the other ones following. Sometimes cutting stocks at loss is part of the game because we can use it somewhere else where we have more confidence. So right now, NEO has passed through the 5-day moving average of 39 and pushed through the strong support of 38, which I drew previously, because when a stock breaks the support and get back up within 1 to 3 days, then we don't consider it breaking the support. So it has gone back up quickly within 3 days. making this a golden dip. Now, as long as it can stay above the 5-day moving average, which is around 39, then we can just keep holding it. Now, it might get rejected by the 120-day moving average, which is around 42.8. And if so, it would get back down to gain more momentum and consolidate first. Now, EH had also bounced back up 31%. EH is looking even stronger than NEO because it has broken through the resistance of 40, passed through the 5 and 10 days moving average all at once within a day. So as long as it doesn't drop below 38 again, we can keep holding what we had bought more last week. You can set a stop loss, but I personally won't set a stop loss because I have strong conviction on EH, and I was quite happy to be able to add much more of EH in my portfolio last week. So for now, I will just ride with this. Now, LKCO had also jumped 32%. At some point during the day, it was up 50-something%. I'm sure it took everyone by surprise because in the morning, it was dropping quite a bit in the pre-market and reaching the new low of 69 cents. I think it really had shaken out a lot of people because of the selling order from a lot of brokers. It jumped up so fast because two reasons. One, because it has shaken out a lot of the shares during the recent days. And number two was because of the court hearing from the Xiaomi that happened today. Well, we still need to wait for the official media to report on how the case went. But from the look of it for now, it seems that a lot of the evidence provided by the DOD were lacking. So it does look like Xiaomi had an upper hand. So we know that Locam Technology was one of the 9 companies, along with Xiaomi being in the ban from the Department of Defense. So as long as Xiaomi can get out of this situation, everything would look much better from Locam as well. So that is why Xiaomi had also grew today, but not as much because it's bigger market cap. And also because analysts had remained the rating of buy regardless of how the ban would turn out in the end. Because they think that after all the volatility, because of all the trigger selling orders, things would come back to the fundamental of the company and it would be back to the normal evaluation that start to make sense again. Because as we know, Xiaomi is also an undervalued company, but of course not as much as Locam Technology. So right now, these two companies are quite tied together and share a quite similar situation. So that's why it affected our LKCO today. Now, if we look at the 1-hour chart, this gap down here in the morning yesterday was the momentum of the short, trying to shake out the last remaining position that had dealt. And then today's strong green bar is showing signal that there is finally buying the dip action happening. But because there were so many people who were trapped at the top, so the moment the share price rise up, a lot of people have the urge to sell. So that's why we would expect to see a lot of sticks looking like this. It means it's trying to go higher, but because of too much selling pressure, so it would come back down. So don't expect it to do a V-shaped recovery, okay? Just we need to be patient because Rome was not built on one day. I am not even surprised if we see it come back down to the bottom again and drain everybody's patience before it runs back up. This is how institutions play it. So patience. If you have decided to ride on this journey, make sure it's the size in your portfolio that cannot drive too much of your emotion. I have stressed this since the beginning to invest in what you can afford to lose, something you can forget about in your portfolio. So then when things go south, it doesn't drive you irrational. So you can still stay calm even when things look ugly. Now on the good side, when we open the 15 minutes chart, this is the downward trend line I drew before. You could see that LKCO was dropping along this trend line for a while already, and every time it touched the bottom of this trend, it bounced back up to the upper side and it would go down following this line. So yesterday I shared this in the Discord and said that we need to at least wait for this to get out of this trend line first. And today it finally broke out this trend line. So we finally see some light at the tunnel. Meanwhile, don't be surprised after the breakout for it to come back to backtest the trend line again. Okay? Now, because of LKCO, I have had a lot of comments that says I am pump and dump or doubt my credibility. But I understand everyone's stress when they're at loss. But at the same time, I have also received a lot of great comments on my channel and in the Discord, encouraging me to stay strong and keep going. And I really appreciate your support, because there are good times, there are bad times. It's all part of the game, because there will be a lot of the good times and as well, just like there will be a lot of the bad times. But at the end of the day, it really shows me who are supporting me with their true heart during the bad times. And this really keeps me going forward. So thank you so much, guys, to be the real supporters. And I will be here as long as you still need me. And I don't recommend any stocks that I do not believe in the future, at least for the next 5 to 10 years. Just like all my top 3, I would never change how I think of a company because of the short-term price action. Because I look forward to the future growth in the next few years. Because every time I buy something, it's because I have such strong belief in them. So I just want you to know that, okay? Now, JKS had also had a very strong rebound today for 22%. I said that I made stop loss at 37, so as long as it doesn't trigger, we can just keep riding this. And for now, it looks safe as long as it doesn't break through the 5-day moving average, which is around $42. And for now, it might backtest first. And a last quick note is that right now Nasdaq passed the resistance, and it needs to stay above this for the next 1 to 3 days for us to know more that this is a true reversal. And for as of right now, if you are using margin, it would be a good chance for you to reduce your margin just in case of further dropping. And if you don't, then you can just sit tight because it might be still volatile. And for any stocks that had gone up quickly, I won't suggest you to chase right away, because there will be a point it would backtest, and that would be a better opportunity to get more in if you didn't buy the dip. So watch out for any bull trap here and there, okay? Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you tomorrow. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.